According to a recent study, 66% of small business owners feel they don't have a good handle on their finances. That's a lot of entrepreneurs flying blind. Welcome to Dollars and Dreams, the podcast designed to empower you to take control of your personal and business finance. You know, the very thought of money and finance can often send chills down your spine and stir up fear of the unknown. But let's change that narrative together. Through this podcast, my goal is to not only to provide you with useful information, but also to inspire and motivate you to take action towards your own financial goals. Let's rewrite your money story together. Happy Tuesday and welcome to Dollars and Dreams. Today's podcast is about something that I see so many small businesses fail at, and that is creating a budget for their business. And quite often they'll say to me when I ask them, have you done a budget? Do you know what your next 12 months projection is for that income and expenses and how you're going to look at your cash flow? And they all look at me and go, I can't predict what income I'm going to have. I don't know what my expenses are. There's no such thing as a crystal ball, Jen. And I get that, but something has to be in place to get you have control of your money. And people will accept that we should budget as individuals. And we see all this stuff on social media about, the 50, 20, 30 budgets and the zero budgets and all these sorts of things. People are quite willing to accept that as individual households we need to budget, but then they don't do the same for their business. And it is one of the things that I see holds so many businesses back from achieving greater profitability, greater financial control, and of having a stress-free business. And of course, all of our businesses are run to give us financial freedom, mind freedom, and time freedom. And a budget will do most of those for you. Because a budget lets you see what's coming. If you know that you've got a big bill coming, you can start to work towards it. It also gives you that crystal ball that we all say doesn't exist, but it does give you a way to look at the future, to see where you're going to have trouble. So if you've got a business that's seasonal, you know that you've got to anticipate that the bills and the expenses of the business may get higher there, or maybe your expenses don't get higher, but your revenue drops down. So you need to make sure that you've got money in place. And whilst I recognize that a budget isn't 100% accurate, it's actually 100% better than doing nothing. Because if you don't do a budget, you have no idea what revenue you need to get in your business. A budget lets you see the potential issues that are coming or the opportunities to make your business more profitable, make your business adjust and have less of an impact on your income. So we always say when we do a budget for a business is we start from the bottom up. Most people will start from the top down. So they'll look at what their revenue is going to be, and then they look at what their expenses are, and then they go, as an owner, this is what I can have. I like to do my budgeting the other way. And I find that when we do a bottom-up budget, that people will take a greater interest in it because it means that they've got a certain amount of income. So a bottom-up budget starts the opposite of what I just said. So you look at what you want from your business per annum as your income. Then we look at what expenses we have to determine what income you need to get. The reason that is more empowering than the other way is that you look at your cost control better, and then you get more drilled in or targeting or specific in what revenue you need to get. So that's when you can look at, do I increase my prices? Do I increase the number of times a consumer buys from me? Do I increase the threshold of how many times people buy from me? How's my marketing working to get that income? So when you work from the bottom up, because that is then drilled into your own income and your profit from the business, you are much more involved in it. You're much more emotionally connected to it, and you will be more likely to succeed. The other thing that a budget does is it looks at the cash flow conundrum. Because when we do a budget, you can see, let's say November is a really expensive month because you've got all the Christmas purchases that are going to come around. That gives you a few months to work out, I need to get some more money in, I need to hold it because I've got a lot of outgoings. Remember, cash flow is the movement in and out of your bank account. It's got nothing to do with your profit or your profit and loss statement. The reason that your profit and loss statement can overestimate your cash flow is because maybe some of the items that you bought, like inventory or assets or equipment, is sitting on your balance sheet. So the money's still gone out of your bank account, but instead of being reflected in your profit and loss, and you're looking at your profit saying, great, I've made a $10,000 profit this month, but you've spent $9,000 on inventory that's sitting in your warehouse, or you've bought a piece of equipment that was $8,000. That meant that your cash flow was probably only $2,000 as opposed to the 10 that you're looking at. So looking at your projections 12 months out in a budget will show you where you're going to have cash flow issues, where you're going to have pressure on the bank account, and it gives you that bit that you can make adjustments. You can reflect things. And that saying that says forewarned is forearmed? That's what a budget does. It looks ahead and it gives you that warning so you can make a decision on what you need to do. As I said, a budget is looking at the profit and loss, but also then looking at your cash flow. It's not just looking at straight profit. And it does get rid of what we call the profit puzzle. So the profit puzzle is, as I just said, where people look at their profit and loss statement. And as accountants, which is what I am, sometimes we have let down our clients because we focus on the profit and loss because that's what we pay tax on. And so when we're looking at our profit and loss statement with our clients, we're getting them to drill into a profit and loss. And of course, a profit and loss is a looking backwards. It's not looking forward. So it's always looking in your revision mirror. I am trying to get my business owners, and it's what I want to encourage you to do, is to look through the front windscreen of your business. Don't worry about looking in the revision mirror to see what's happened, which is your profit and loss statement. Look through the front windscreen of your business to see what's ahead of you. I mean, you don't drive a car constantly looking at the traffic behind you. You drive a car looking forward, looking at anticipating what the car 3 or 4 cars ahead might be doing. If the car ahead has slammed on its brakes, the next 3 cars in front of you are probably going to slam on their brakes. And so you need to be ready to do that so that you don't run up the back of the car in front. And that's what you need to do with your business. I mean, we say it as a cliche, but driving your business is like driving your car. Your dashboard on your car tells you how much fuel you've got left, if the car's overheating, what speed you're going at, and all those sorts of things. And you're looking through the front windscreen to see what's ahead to anticipate what you need to do as a driver of that car. Your business is the same. Your cash flow will tell you how much fuel you've got left in the tank. Your income will show, your profit and loss will show you what speed you're traveling at and all those sorts of things. But looking ahead in the front windscreen is your budget. And in front of you, you're looking at the next 12 months. What does that look like? Do I need to start to think about bringing on employees because I can see that my growth is going to change? You've got lots of things that you need to look at as a business owner. But if you're just concentrating on your profit and loss statement, you're not doing yourself as a business owner any favors, and you're definitely not managing your business as a CEO. And I always say every business owner is a CEO of their own business. It's just whether you act like one or not. And of course, doing a budget is part of being a CEO because you're looking forward to what lies ahead for your business so that you can make informed decisions about, as I said, whether you need to put money aside for the growth or whether you're going to have some issues with supply even. You may know that your supplier shut down in January, but you've got a big job starting in February. So do I need to buy my stock in December to do that big job in February because there might be an issue there? So that's part of budgeting. It also stops the common trap we have called the growth trap. And that's where businesses are growing and they can see their revenue growing. And so they make the assumption that they are making more money. And of course, as you're scaling, you don't necessarily make more money because you have a greater injection of cash. And if you haven't built that into a budget, you will get to that point where you're starting to scale and you won't have the cash flow to grow the business, which means then that potentially you'll lose customers because you're not servicing them like you did before you grew. Potentially you will not be able to attract great talent to work for you because you can't pay what they need to pay. And it also can mean that when you're growing and scaling, that your revenue is growing, but your profit isn't. And of course, you don't want to grow just because it's the sake of growing. Growing is about being better at what you do. Growing is about getting a better cash flow. It's about getting a greater profit for you to live and enjoy in your own personal life. So don't get caught in that growth trap of just growing for the sake of growing. A budget will tell you that by growing, whether you are going to get a better profitability for your hard effort that you're doing. The other thing with doing a budget, which is what I alluded to before, is that it lets you look at unexpected expenses that could be coming your way. You may start to grow and you need that extra space. You might need bigger commercial space for your office. You might need a bigger warehouse. You might need new trucks. You might need new staff. You might need new systems and procedures. A budget will look at that for you because you'll look at your income's growing, but I can't keep up. How am I going to service that? And there is more to a budget than plucking figures out of the air. You know, I looked at a budget the other day that a client did for me because I asked them to do a budget for the next 12 months. And it came in and I might as well have just taken month one and put it out by 12 because what happened in month one, the income was the same. The new clients was the same. They'd worked out that they could grow by, let's say it's $10,000. It doesn't matter what it was. They worked out that they could take $10,000 more in income, but all it did was every single month went up by $10,000. And I said to them, if you bring that client on, are you not going to get flow on work from them? So every month, if you bring on 4 new clients, which is what they budgeted for. And I said to them, but if you bring 4 new clients on, is it a one-off transaction or is some of them going to buy from you over the next 12 months? And of course, their answer was, probably 50%. About 50% of my clients are transactional. 50% will go on and keep buying for me for the next 12 months. And I said to them, so does that mean next month where you've done your 4 customers again and put in $10,000 that you're actually not going to get any of those from the month one come back as consumers? And they looked at me and they said, yeah, but that's my new growth. And I said, but you haven't budgeted in for the new income from the new customers from the month before. So your budget has to be realistic. So I sent them away and I went, let's go back and look at the 50% will buy off you. Go have a look at your trends to see, do they wait 2 or 3 months to buy from you again? Or do they buy the next month because they were so happy with what they got in month one? That is part of the statistics and the inside knowledge that you need to have with your business, because that is the story of your business and what you should be judging your business by. And I always talk about with clients looking at what we call KPIs, so key performance indicators. These are the patterns that your business does, and they're not always financial. Financial KPIs as part of it, you want to make sure that your gross profit margin's not decreasing. Gross profit margin is what you have left over after producing whatever it is that you sell. And it's there to cover the fixed costs like your rent, your telephone, your electricity, and all those things that happen regardless of whether you sell a product or not. So your gross profit margin is a really big KPI that you need to keep track of with your business, because if you have that decreasing, you have less money left over to cover what we call fixed costs. So those things I just talked about. If your gross profit margin is increasing, so it's gone from, let's say, 40%, which means 40% of every dollar is left to cover the fixed cost. Let's say you take that from 40 to 45%. All of a sudden, with every single dollar that you sell, you've got 45 cents left to cover your fixed cost rather than 40 cents. So I'm sure you can see how that means that you will have less pressure on your business to cover those costs that come regardless of whether you sell anything or not. So a KPI is obviously that as a business owner you should be looking at is your gross profit margin. But the other KPI that I always tell people to look at that isn't shown in financials is that financial knowledge of your business. How often does a consumer buy from you? Is it once, twice, 3 times a year? You will have some that are outliers, don't get me wrong, but the average consumer, how often do they buy from you? When do they buy from you again? Is it immediate or is there a lag? Does your consumer buy for you after you've done a marketing campaign? So a marketing campaign doesn't have to be advertising. And a lot of small business owners don't know that. It's about keeping in contact with them. So you might have a newsletter that goes out every month and it's value to your client. But it might also say to them, oh, you're right, Christmas is coming. I do need to get the camping equipment because I'm going away, or I do need to buy staff Christmas presents before the rush comes, or I do need to organise whatever it is. So an email campaign is still marketing. It keeps you in front and centre of your client. So your budget will work out when those consumers should be buying off you again. And that's part of understanding that if you sell to them today, whatever it is you sell, your product or your service, how often does your consumer come back again? So in this budget that I was talking about with my client, they'd done the 4 new clients a month, which gave them, an average of $10,000 revenue for the month. But then they needed to go and look. So the consumers, 50% of them will be transactional. So we'll say 5,500 will never buy again because they got what they wanted and they moved on. The other 50% will come back to buy again during the year. And this is on their statistics that they have from their client base. So they know that 50% of those clients are going to buy at some point in that next 12 months. So I said to them, when do those consumers buy again? Their answer to me was, well, half of that half will buy again within the next 2 months. The other half tend to be at about 6 or 7 months. So I said, all right, well, now that we've got that they've bought from you the first time in month 1, you need to say half of it's not going to come through, but the other half, how much did they spend the next time? So this is about understanding your customer. And so if you know that customer 1 who will buy again in 2 months will spend maybe $1,000, go and put that $1,000 into month 3. If you know that customer 4 is going to spend another probably $2,000 because they wait, so they buy a bigger thing. They buy it in month 7. Go and put their $2,000 in month 7. So what that did is it gave them a workable document so they could see that potentially in, let's say, month 9 or month 10, they were going to need a lot more resources because they were going to have more income and more expenses. So that's what a budget does. It gives you that knowledge so that you're not hit by the unexpected expenses or the unexpected resources that you have available. A budget, as I said, also gives you the ability to look at your pricing. Now, one of the things that we always say with our clients is always look at increasing your pricing where you can. Never leave your pricing to do big jumps, because your consumer will always notice when you put your prices up significantly. So if you're not putting your pricing up but your expenses are going up, your gross profit margin will be decreasing, not increasing, which is the name of the game. So if you are not looking at your pricing as your expenses are going up, you are in effect subsidizing your consumer. Whether you like it or not, that is the reality of what not putting your pricing up. You are subsidizing your consumer, whether that's another business or a person, to support their lifestyle. So you should be looking at increasing your pricing by at least whatever your expenses are going up by. And you can only know that by doing a budget, looking at what your suppliers are saying their pricing's going to go up. You can't just keep plucking figures out of the air and hope that you'll be okay. You need to do your projections forward. So Excel is your best friend here, or you can do it on a piece of paper if that's what you want to do, but Excel is your best friend. I have inside my Pathways to Profit, I actually have a budget template that I get people to do so that they can project that forward. So if you're looking for more help in how to do a budget for your business and look at your pricing structure, come join me in Pathways to Profit, which is on a course on our website, jenrichardson.co. But if not, sit down with Excel. Most of you can use Excel and put in what your projection is. Remember, I want you to start from the bottom and work your way up. So start at what you need your profit to be so that you get the income that you want to work through, what income you need to generate. Once you've done that, pricing is your power play. So this is where you look and you say, well, if I don't get my sales to here, I'm actually not making the money that I want from my business. And remember, we design our business to give us the lifestyle we want, not our consumer. Once you know that you need to increase your pricing, it makes it much easier to make that decision. One, because you've got the numbers to back it up, but two, those numbers give you the courage to do it. They give you the knowledge to be able to put your pricing up without it being plucking a figure out of the air. But it also gives you the opportunity to discuss with your consumer why your pricing's gone up. And, we've all been into bakeries where they have a little sign up, due to the price of flour and sugar, our cakes have all gone up by 10%. That is the justification that they've done as to why they put the pricing up. And of course, your consumer, when they understand why you've put your pricing up, will tolerate that price increase better. If you can explain that those costs have increased the same as their costs have increased, they will accept that it's part of business. And running a good business is about making informed decisions and being able to explain them to people so that they don't have an issue. The other thing with a budget is that it solves the debt dilemma. Because when you do a budget, as I said before, you know what is coming. If you don't budget for those additional expenses or the additional resources you've got to get because you're growing, or the increase in your costs, you will turn to debt to keep your business afloat because you haven't budgeted for the extra investment that you'll need to do down the track. And of course, once you start borrowing money for your business, it's a debt spiral. I've got clients that I've worked with over the years that have borrowed money for cash flow purposes. And then they pay that back. But because they're paying that back, there's even more pressure on their cash flow because now they're trying to pay a debt as well as trying to put money aside for the new debt that's coming or the new expenses that are coming. So they pay off their cash flow debt, then all of a sudden they've got a cash flow shortage because they're chasing their tail. So then they're borrowing again for cash flow. And it can be a never-ending cycle all the way to the bottom. You need to do your budget so that you know what pressures you're going to have so that you don't go into that debt dilemma. Or even if you do need to go in the debt dilemma, because let's say you need to buy a really expensive piece of equipment because you're growing or moving into a different market, knowing that you need to borrow that money to get that investment, you've just got to put a strategy in place on how to pay back the debt in a reasonable time. And it is part of your process then for projecting those expenses forward. I don't ever want you to be in the debt dilemma where you've got the cash flow shortage and you're using short-term lending to pay debts, not paying the tax office, because that is in effect a lending issue and it can make your business spiral out of control very quickly. You definitely don't want to turn to credit card debt to get your business through a short-term cash flow issue. And you definitely don't want to be not paying your suppliers, because you'll get not the greatest service if you're not paying your supplier, to the point that they may say, we're actually not supplying you till you pay all of your accounts. And that's the advice I give all of my clients. Do not keep supplying to your consumer if they haven't paid the last invoice. You are not supporting their business. That is their business to support. So tracking what debt you might have coming forward is two types of debt. As I said, it's the cash flow type issues that you should be budgeting for now and looking to increase your pricing, because that is an issue that comes with pricing. Or making an informed decision that you're going to have to borrow money for a major investment in your business. Don't fall down the financial hole of not knowing that you've got additional expenses coming. And as I said, the budget will do that for you, because part of doing your budget is also looking at your cash flow. I just briefly mentioned there that tax is one of the biggest things that we see with small businesses, because you've collected the government's GST. If you're in Australia and listening to this podcast, you've collected the tax that was never your money. So part of your revenue coming in is not your money anyway. You've just become an unofficial and unpaid tax collector. So the GST needs to be passed on to the government. So that needs to be set aside, because it's never your money anyway. And we see a lot of small businesses that will use that tax as a cash flow issue for themselves. And then when they go to do their business activity statement or lodge their income tax return and they have a debt, the first thing they say to me is, I haven't got the money. I spent it because I needed that money to pay the bills to actually keep operating. That is the budget that failed them, not their being able to save. It's the budget. So you should have budgeted for that. You should take your tax out of the revenue, so you're only declaring your income in the budget on the GST exclusive amount. But you should be declaring the wages that you're budgeting at your gross amount. You should be budgeting for the tax that's going to come out of your profit. So you don't want to look at, let's say you want $100,000 a year take home. You actually need to collect 130, because you'll have to pay 30,000 in tax on that income in your own name, unless you're an employee of a company. So if you're paid a wage through your own company, tax is paid for. You don't need to worry, but you need to set aside money for taxes, because again, we see a lot of people that will withhold tax from their employees' wages, because that's what you have to do as an employer. But then they don't set that money aside ready to pay the tax office. It is not your money. It is the money that belongs to your employer and has been paid and should be paid to the tax office. Budgeting will work that out. It will work out how much you need to set aside for your tax liabilities so that you don't get caught and you don't use money that isn't yours. I always say to clients that I work with, set up a separate bank account for your tax and your super, because if you've set it aside, you don't have to worry about the finding the money. It's sitting over there so that when it is due to the tax office, it is there waiting to go. Nothing will drive you harder than not having money in the bank account. You don't want to be tempted by the tax office's money because that is not your money. Budgeting will get you around that. So when I'm asked by people, why should I do a budget? They take so long or they pluck figures out of the air. It's about you being the CEO of your business and being responsible for your business as it should be run. And that is your role as a CEO of a business. And whether you like it or not only being in business did you have to run your business, you have to be the CEO of it. You have to make informed decisions and you have to do what is in the best interest of your business. Remember, a business is there to serve you, not the other way around. And so doing a budget, doing a cash flow projection, and all the things that I talk about in this podcast and on my website is about you setting things in place so that you have control of what you do and what your business does. These are all the things that I will teach you in Pathways to Profit. So if you're finding what I'm talking about overwhelming or you're nodding your head along with, that's what I do. I've been using the tax office's money to pay and I'm in that debt spiral and I didn't know that I needed to look at my gross profit margin. And all of these things is what you should know. Measuring your KPIs. So if you're a small business owner and you're listening to this podcast or watching this podcast and you feel that this is you, this is me. I have no idea where my money is. I don't know what I need for next January. You need to come do my Pathways to Profit course and I'll show you how to do it. I'll be there to guide you. It's all done with live Zoom so you can tap into my brain without the cost of what it would be. Now, inside Pathways to Profit, I'll go through how to set up a cash flow statement, how to look at your KPIs. The most important thing is how to get your business mindset in place and rework so that you've got a growth mindset, but also so that you can get that real mind freedom that you can get from a job. I'll give you all the tools and templates and it is supported through me. Now, if I sat with one of my clients and did each of those, I would be charging probably somewhere between $2,500 for each of the things that I'm doing inside there. So you're going to get an incredible amount of knowledge and understanding of your business at a really small rate. So if you have questions about Pathways to Profit or you're not quite sure if Pathways to Profit is for you or if it can help you, reach out to me here at jenrichardson.co and I can help you with making that decision because it's not for everyone. I understand that. If you do nothing in your business or you choose not to join me in Pathways to Profit or any of my other courses, I have lots of free things on my website. I've also got lots of tools and templates that are free. I've got a series of webinars coming up. So every week I will have a new webinar that you can listen to and watch, and that will help you with your business. As I've said, I'm on a mission to help 10,000 small business owners be better at their business, and I can't do that on a one-on-one basis. So I'm going to do that through the podcast that you're listening or watching, through my digital platform with free webinars and tools and templates, and of course, my course, Pathways to Profit. If you have never done a budget for your business, today is the day that you need to start. It is such an important thing that you need to do, and it is something that will give you that real financial freedom, mind freedom, and time freedom. So thank you for joining me today. I look forward to catching up to you next week, and have a lovely week. Bye for now. Remember, the advice shared in Dollars and Dreams is general in nature and it does not consider your own personal circumstances. Dollars and Dreams is for educational purposes only and should not be relied upon to make investment or financial decisions. If you need more help, please reach out to a financial advisor for tailored personal advice. Don't forget to click that subscribe button so you don't miss out on future content. And please leave me a review. Your feedback really helps me to reach other people chasing their money dreams. You can find me over on Facebook and Instagram to connect with me. You will find the link in the bio or head over to my website at jenrichardson.co, where you will find free content and learning tools.